traditional tax prep. This is Green Lights, the Physician's Tax Show, unlocking the legislative incentives of the tax code.
Welcome to episode 2 of Green Lights. In our last episode, we broke down the home office hack and showed you how to turn your clinical commute into a 100% tax-deductible business trip. Today, we are building directly on that foundation by diving into travel expenses. And this could be a potentially big one to write off for doctors/physicians who have 1099 income. If you are an ER doctor, a hospitalist, or a locum tenens specialist, you probably work long, grueling shifts when you are at the hospital or clinic. This is especially true if you are working back-to-back shifts or shifts that are scheduled real close together. If you've brought this up to a traditional reactive CPA, they've likely given you the standard answer of you can't write off your travel, meals, or drive to the hospital because that is classified as a personal, non-deductible commute. That advice is costing you thousands of dollars in lost deductions. Today, we are going to show you how a specialized tax strategist runs the offensive playbook to turn those marathon shifts into clean, paperless tax savings. Let's look at the actual tax law. Business travel expenses are deductible only if they are ordinary, necessary, and directly related to your existing trade or business. To qualify, you must show a clear business purpose, and your expenses must be substantiated with records showing the amount, time, place, and business purpose. But here's the green light. Under IRS guidance, a business owner who maintains a separate business location, like your hospital or clinic, can still treat their home office as their principal place of business for tax purposes. Under IRC 280A-C-1A, as long as you use your home office regularly and exclusively for administrative or management activities, and you have no other fixed location where you conduct those activities, your home office is your administrative headquarters. Once that is established, that's where the magic starts. Every single mile you drive from your home office to the hospital is no longer a non-deductible commute. It is now a 100% deductible business trip. Now let's layer on the travel rule that we mentioned on our recent webinar at physiciantaxsolutions.com. Under the tax law, from the exact moment you leave your home office to the moment you get back to your home, if that total door-to-door time period, including your shifts and your driving back and forth, is more than 12 hours, you are legally considered to be traveling overnight. Once you cross that 12-hour threshold, you do not need to keep individual grease-stained food receipts. Every city in the United States has a designated federal per diem allowance allowed under the tax law that you can choose to deduct, in lieu of actually tracking your out-of-pocket expenses. It is a highly generous, completely paperless tax shield. Okay, now here's the fun part. Let's do some math. The slide formula for calculating your tax savings is tax savings equals eligible travel costs times marginal tax rate. Suppose you are an independent ER physician working 15 long shifts a month. Your round-trip drive from your home office to the hospital is 40 miles. At the standard mileage rate of 72.5 cents per mile, establishing your home office as your principal place of business immediately unlocks. 40 miles times $0.725, this is the 72.5 cents per mile, equals $29 in mileage per shift. Now, because your door-to-door shift time and travel exceed 12 hours, you also claim the local high-cost federal per diem rate. Under single-day travel rules, you claim 75% of the local rate. Let's assume a standard high-cost locality rate of $92 per day. So now it's your per diem allowance equals $92 times 0.75 equals $69 per shift. Then, we combine your mileage and your paperless per diem to find your total eligible travel cost for every single shift. Eligible travel cost per shift equals $29, mileage plus $69 per diem equals $98 per shift. If you work 15 shifts a month, that equates to $1,470 in monthly travel costs. Over a full tax year, your cumulative travel shield is annual eligible travel costs equals 15 shifts times $98 times 12 months equals $17,640 per year. Finally, let's apply the slide's savings calculation. For a high-earning doctor in the federal 37% marginal tax bracket, your actual cash-in-pocket tax savings are annual tax savings equals $17,640 times 37% equals $6,526.80 per year. That is over $6,500 in pure tax savings kept in your bank account, achieved without tracking a single coffee, lunch, or gasoline receipt. That's an extra $6,500 going into your savings. To claim this safely, remember that you must keep adequate documentation of your shift times and mileage logs to substantiate the deductions. Keep in mind that personal or vacation days are not deductible, and expenses for spouses or dependents are only deductible if they have a bona fide business purpose. Stop playing defense. Turn those grueling 12-hour shifts and long commutes into proactive tax shields by establishing your true administrative headquarters at home. To draft your personalized, proactive tax blueprint, visit us at Physician Tax Solutions and schedule your strategic consult today. Again, this is Jeff from Physician Tax Solutions. Keep the lights green, and see you next episode.
The information provided in Green Lights, the Physician's Tax Show, including all associated media, is for general educational and informational purposes only. It does not constitute formal tax, legal, financial, or investment advice. Tax laws, including Section 280A, Section 162, and other provisions of the Internal Revenue Code, are highly complex and subject to change. Transmission of this information does not create a CPA, client, attorney-client, or advisory relationship between the listener and Physician Tax Solutions, or Provident CPAs, PLC. Before implementing any strategies discussed on this show, always consult with your own qualified, licensed tax professional or legal counsel to evaluate your unique financial situation.